Hello, my YouTube friends, and happy Saturday. I hope everybody's doing really well. Getting a little bit chilly despite it looking beautiful, but I guess as I've adjusted to Vegas, a little bit chilly is probably pretty nice for most people across the US. Anyway, today I'm going to talk about how I prepare for the option selling in my son's account that we opened up. He had another good week, which is great. Hopefully, it gets him more encouraged to get involved and learn a little bit about investing. I'm going to show you what I do, and then towards the end of the video, I'm going to bring him into the video, let him make his picks for what he wants to sell going into this week. Now, I did cheat a little bit. I bought him 100 shares of LAC. He doesn't do the research because he's busy going to school and doing the things that any 14-year-old should do. But quite honestly, I like to encourage people as young as possible to get involved. And since I'm watching it and kind of making recommendations on which stocks we should trade, I thought this was a good one that would match the portfolio that needed lower price shares of stocks that are rather volatile so he could actually collect a decent premium. I'm also going to go into some bargain stocks that I see out there, and I'm also going to discuss what delta is when it comes into options. Partially because I saw the first YouTuber recognize some of the things that I've been talking about, which is everybody seems to call it the wrong thing, and it's all these YouTube gurus on there explaining what delta is incorrectly. I was actually impressed because it's somebody who I don't respect a whole lot in terms of some of the other stuff that they talked about, but they actually had a good grasp of delta and kind of understood what it referred to in terms of options trading. So stick around, this should be a very good video today. So first things first, what happened in my son's account this week and how do I prepare for going over it with him and kind of going into the things that we're going to do for the following week. Now, he had the first option exercise. We were short a 17.5 call in Soundhound, and Soundhound closed, if I remember correctly, approximately $17.80. So he got taken on 100 shares of Soundhound. He still has another 100 shares. Nothing else happened. I bought one share of Open Door originally just so it's in his account and he can see it, but he's been selling puts in Open Door. And then, as I said, I bought 100 shares of LAC. I talked about that a little bit in another video, or possibly two. I've been really harping on this, buying whatever the government's getting involved in, and as they get involved in more and more things, I think it'll eventually dilute and not be as good a trade. But currently, I think it's a phenomenal, no-brainer investment strategy. You've seen it with MP Materials originally. We've seen it with OKLO. Actually, that was the first one, but OKLO and how it's done since the director of energy was put in place, and that stock has gone from $20 a share. It closed this week at $127 a share, but it's traded as high as $140, which is pretty crazy for a stock that hasn't made any money yet, from what I can tell. We now see it going on with Intel that's beginning to go, and I think could have a lot of room higher. And now they've even added on LAC, which is Lithium American Corporation. If I remember correctly, it's actually a Canadian company, but they found some of these rare earth minerals in whatever it is that they're mining for, and the government got a 5% stake in them as well. Now, what I like about this company, even though they were going bankrupt and not doing real well and likely going to go out of business, but I like that they have an extremely small market cap. So it makes it really easy for somebody to drive stock prices higher who has really deep pockets like the US government in order to be able to push it higher the way that they may want to. So basically what I'll do in preparation for going over things with him is, excuse me, is I'll take a screenshot of this week's calls and puts in the stocks that he has. So I'll take a screenshot of Soundhound for, what are we in, October already? Oh my God, the year goes by so fast. But the October 10th option chain, and we'll go over that and kind of discuss the things. And I'll do some of that on camera so you guys can see. But I'll do the same for Open Door, which we can't sell covered calls in because he doesn't own any of the stock. And with Soundhound this week, and usually he takes the advice, I don't know that I would consider selling another covered call unless he just wants to continue to take in premium, which is up to him. It's his account. But at this point, once 100 shares are taken and he has 100 shares left, I'm not sure that I want to it's his account. I still think of it as me, but be completely out of the position because the stock seems to really be running. And I want to explain to him that when a stock really runs, you probably don't want to continue to sell calls, even if they're really far out of the money. Because if it ends up being one of those stocks that just takes off and goes parabolic, you don't want to lose the position. But what I will talk about is since we did get taken on 100 shares that we sold, that we can be pretty aggressive on the put that we sell and try to collect a nice premium. But again, my recommendation to him is I would only recommend selling one put. I don't want to get too aggressive on continuing to trace higher as the stock's going parabolic, but maybe selling a very close put to the call that he got taken on. So since it was the 17 and a half, maybe we'd look at a 17 or a 16 and a half put to sell against the one that we got taken on, and then not get any more aggressive and probably not sell any more puts because originally we were getting in when the stock was trading, boy, I don't remember exactly, but maybe $15 a share. But it's really run since about $12 a share, and I don't want to getting caught in a down draw that could legitimately go back to that $12 range and buying too high if it goes back down, because stocks that go up really quick can have really fast down moves as well. As for Open Door, it ended perfectly. It bounced around, it fell below his strike prices, bounced right back up, closed the week above his $8 strike. And what I'd probably recommend is doing similar to last week and selling one of the $8 puts and collecting a nice premium, because if I remember, the stock closed at maybe $8.20 or so. So you're going to get a nice premium selling the $8 put, and then maybe a $7.50 put, because as he felt comfortable, if he gets filled on those options, it's not a ton of money in his mind. He'll be comfortable reversing and selling calls on it, and Open Door really might be in play. Now, my analysis, and I'll talk to you about this, and I saw somebody else talking in another video, and it's kind of how I feel. The guys who went into Open Door and the transformation they're making and the reason that investor bought into it all really make sense, and they have a vision that may or may not work. But they took on the COO of Shopify, who is a legit person. He has a background of working in Meta before, and even though the stock has already run as far as it has, their goal is to transform the way that real estate works. I don't know their vision, but I will tell you I have visions for that too, because in today's world where 6% still tends to be what comes out of the contract when people list a home for sale, that seems pretty exorbitant. When I think about what a realtor did back in the 1970s and the 1980s, where they had a book, they had relationships with their other realtors to know what homes they had for sale. If they were really good at it, they went and visited the properties, saw what they looked like, understood what work they needed. They had a good understanding of upgrades and condition of the home, and really worked for the clients. As we fast forward, what is it, 50 years later, to where it's primarily online. You can see the photographs, you can get a really good feel of a property. It's much easier for a person to do their own research, while it still helps to have a realtor who understands the market and keeps on top of things. It really has changed a lot over the years. I'm imagining the guys who are going into Open Door recognize this and see that all of the competitors that they used to have gotten out of the space. So this creates an opening for them to potentially really transform everything if they're able to drive the customer base, which is not so simple. I mean, most people go to Zillow right now, maybe some go to Realtor.com. I don't know how many think of Open Door, and at least if I understand correctly, they're still in the business of buying a property and selling a property. If they could move that to a different platform where it's more like they help buyers and sellers match up together and take a smaller percentage, I do see that being able to be done at some point. I think there's a 10% chance they're able to do it. And if they are, I really think the stock could be an 100x. I wouldn't be shocked to see the stock at $500 or more a share, which I know sounds absolutely ridiculous for a stock trading $8. Because remember, I said maybe there's about a 10% chance. I also think that means there's about a 90% chance that the stock ends up going to zero and they're not able to do what they're able to do. For me, a very small bet on something like that is kind of worth it. If I can throw a small amount of money into something about like that where I don't worry if it falls to zero, but recognize if it really does 50x on the what I would say on the lower end, that becomes a real something that I would then care about. That's a bet I don't mind making, but I do recognize I really could lose my money, and I look at it as kind of going to the casino here in Las Vegas. Now, as always, this is not financial advice. By all means, you should not be listening to me or anybody else on YouTube for that matter. We are just people sharing our information that works for us. It is entertainment purposes only. You need to do your own research when doing your financial decisions and potentially reach out to a financial advisor, or if you use a lawyer or an accountant, somebody like that. Definitely not me. I am a huge idiot, so I got no issue. I think it's entertainment, but like that guy said, not entertaining to him, so that's cool by me too. Now, Lithium America Corp only has monthly options, so we'll look at the 7th. It's for the 17th is when they expire, and see if any of that looks interesting and if he wants to trade any of it, or maybe he just wants to get out of the stock. I don't know. Really, I'll leave it up to him to take a look. Again, I'll bring Jacob on a little later and we'll go over all of that. So let me talk about Delta while I have it on my mind and explain a little bit of what drives me nuts a lot of times listening to other YouTubers. And I think this is what Robinhood posted on their website is what Delta is, because I made a comment on somebody's site and their response was, well, that's what Robinhood says it is. And they responded that way as if they were knowledgeable and that's what Delta actually is. A lot of people on YouTube refer to Delta as the percent chance that your option ends up being exercised at expiration. That is a really simplified and somewhat incorrect definition of what Delta is. Delta is actually the percent that the stock option, the option that you're looking at, will move in relation to the underlying security below it. Meaning, if you're looking at a delta that is a 20 delta option on a stock trading $50, as it moves from 50 to 51, your option should move 20 cents. Now, keep in mind, delta is fluid. The only thing that I would pick on the first person on YouTube who I saw actually explain it correctly was talk about it as if it was some random estimate. It is not really an estimate. It might be off a little bit based on some other things going on with the market, and it might be skewed based on a position that the traders might have, but it isn't really an estimate. But what ends up happening is, as the stock price moves, the delta changes. It is not stagnant. On top of that, as time changes, the delta may change as well, and as volatility changes, the delta will change as well. But it's a good snapshot of how much the option should move as the stock moves at the moment of purchase or sale. Again, that'll change since it's fluid. The time decay, depending on how short your options are, will impact that significantly, but so will the stock price movement. I mean, if you buy a 50 delta option, which is going to be an option that is at the money, so you buy an $100 call on an $100 stock, that is a 50 delta option because it's got a 50-50 chance of going either way, and it's going to move about 50 cents for every dollar that the stock moves. Well, as the stock goes up $1 and you're now in the money by $1, you impact it where it's no longer a 50 delta option. It is going to be a little bit more than a 50 delta option. And as it continues to move higher, the delta will get higher as well, and vice versa. I don't know if that explains it well. I don't know how many of you care. I don't know that it's so important as you move off the trading floor and start trading these things to collect premium more than anything else. Where it really matters is if you are an option trader and you have a zillion of options on, that you look at your entire portfolio and trade your deltas accordingly, because you're really trading volatility and time decay. You're not really trading deltas. It's a way to hedge your position. If you're long 300 different calls, short 400 different calls, a bunch of puts both sides, they're able to amalgamize, did I use that properly? all of those positions into one formula to Black-Scholes model to be able to tell the traders their actual delta position so that they can hedge accordingly. As people that are using it from home to trade one or two options, it's more important to just use your own brain to see if the premium makes sense for what you're trying to do and if it works for your goals in terms of trading options. Boy, that got really jumbled in some ways, but I hope it explained it well and you understand. And I primarily do it because there are so many YouTube gurus on there talking about it as a percent chance that it ends up in the money. Be really careful. Like, that's a big red flag that may not be the guru that you think they might be. And I don't mean to pick on all of them, but it's kind of why I say be careful about who you're listening to and what you're doing. And don't listen to me. I like, really do your own research, learn about this stuff, take a few minutes, because if you're going to be investing your money, you really should be educated on what you're doing and how you're investing. Now, if you want to sign up for my $10 million 5-minute course, by all means, I'll be happy to come up with one. But otherwise, I don't know that I would be recommending signing up for anybody's course either. This is nothing that you can't find out on your own, and the only real way to see how trading works is to step in and do it. As for bargains in the market, healthcare. I'm not going to point to one particular stock. I really think a lot of them are undervalued. I think that whatever went on with the agreement between Pfizer and the government took like a blanket off of healthcare, which is why we saw so much of it move up higher. Me personally, I watch Bristol Myers. Obviously, I watch United Healthcare, and I watch Moderna because I have positions on them. I've been watching ELV as well because my buddy Billy loves them, so I put on a small position, but I'm not real familiar with them, so I didn't put on too big a position. Because again, this is kind of my point of do your own research. If I haven't done the work myself, taking the advice of somebody else, not that I don't believe they're right, I will screw it up. You have to do it yourself because then you'll trust it more when it's research you've done. I was really happy to see the price action in United Healthcare. I feel like they consolidated long enough between $330 a share and $350 that I'm hoping now that they've kind of breached that and traded up to $360 that we do have that leg up that I talked about in another video. But again, nobody can predict the future, so whatever. But I'm not doing anything with the position I have on. I'm hoping it just runs. And I really believe that it could be a CrowdStrike moment. Like, I think we could see United Healthcare, as crazy as it sounds, push new highs over the next 6 to 12 months. And if it does, as it breaches those, it could even go significantly higher. I know that is an outrageous call, and I am not promising or predicting it. But what I find is when a stock falls off that hard, that quickly, and rebounds the way that it has, it's shaken out enough sellers that there isn't a ton of selling pressure on it, which allows it to float higher. And as it starts getting higher to where it attracts new buyers, when it finally breaches the old highs, all these new buyers come in and there still aren't any sellers. Now, that is just trading background. That has nothing to do with the fundamentals that I typically look at or anything else. But as a trader, that's what it feels like to me with United Healthcare. The way that the stocks acted, though, when Pfizer and the Trump administration worked out whatever agreement they did to take them being off the target of tariffs, it seemed like it was a big relief on a lot of healthcare companies. So I'm guessing it really is. I'm hoping that the bottom is finally in Pfizer. I even saw an old video of mine from a year ago where I was talking about how Pfizer was a bargain where it was. I still believe in it. I am not pushing Pfizer in particular. I saw Bristol Myers and how much it fell from where it was before, the dividends that they're paying. And if this is really a good end, because it now means it kind of gives some clarity as to what's going on and what type of pressure these drug manufacturers are going to have in terms of their selling, and it's no longer a problem. It takes that off. Hopefully those bottoms are in, and it allows it to drift higher, as if I was describing in the video from a year ago. And my goal in Pfizer was to pick it up where it is, get a really nice dividend. It got as good as 7%, a little bit higher at one point, and then just drift over the next few years. I don't picture Pfizer as being some high flyer that I'll crush it on the valuation of the stock. But if I woke up in 5 years and it had doubled, talk about a home run because I've collected an incredible dividend in the meantime. That's my goal with a company like Pfizer is to get lucky with the timing, even if it's over 10 years, to be able to get a 6% and change dividend over a 10-year period where the stock slowly doubles is really good return while getting paid to have that position on. And for me personally, what I like about some of those higher dividenders like that is it's a way to put money away that I would rather do than owning a treasury where I'm capped at the return and that's it. Now, with the treasury, I don't have to worry about the downside, but I also talked a little bit of about that when I talked about Target. It is not that I think it's the best company in the world, Steve, if you're listening, which I know you don't watch the videos, but if you are, as much as we joke around, it's more that if I can get a 5% and change dividend in a company that I'm pretty comfortable with their earnings and their ability to pay that dividend, with the potential that I could get some upside on it as well, for me, I would rather invest in something like that than buying a CD or a treasury. And I have very little money in bonds because of that. I assume since nobody's put in the comments about trading low volatility stocks using options that none of you have. If you have, really do me a favor and put it in the comment section. I'd love to learn about the one you're doing it with. Because again, I'm beginning to enjoy Saturdays because my phone starts to ding with all the options that expire. Now, sometimes I get assigned on something, but I have really enjoyed doing this with Conagra. Maybe it's just been random lucky timing. Maybe it's just been the right time to be doing it, but the stock really goes pretty much nowhere. And I've been able to collect premium on these options week in and week out. And consistently now, where I'm recognizing over the past month and a half, if it continues the way it has, I should really make over 20% return in a company like Conagra. Again, similar to what I said about the others that I would just rather have than a CD. Now, I have to be more accurate. Not accurate. I have to be more on top of it. I have to be more active. That was the word I was looking, because I'm paying attention and I'm trading the options. What I am looking to get in Conagra specifically is 15 cents a month. 15 cents a month on one option on Conagra is a 9% return based on the stock valuation, if you're able to continue to do that month in and month out. The reality is, I've been able to get that every 2 to 3 weeks on average instead of every month. And I've been selling a call and a put instead of just one, doubling that return. And I've been fortunate enough that the price hasn't really gone much of anywhere. When the earnings came out this week, it popped right back up into the range. It looked like it was threatening to go lower, and now it'll go right back to selling calls and selling puts. Me personally, I would like to get taken on some of the calls that I've sold already so I can be a little bit more aggressive on the puts I'm selling. But it's okay either way because I'm going to get a distribution on the dividend as well, which in Conagra is another 7%. So if I'm able to get 9% on a call, 9% on a put, getting to 18% on that, and then get another 7% on the dividend yield, that's amazing. The one thing to be careful about is the ex-dividend date and the earnings dates. Because on the ex-dividend date, whatever your stock pays out as a dividend, theoretically, the stock share price should drop equivalently. So your calls should be a little bit lower priced, and your puts should be a little bit more expensive to account for that. If you take a look at Verizon, which is another one I've been doing, they pay out next Friday, and you can see that in the prices of the option. The puts are a little bit higher, the calls are a little bit lower, and that's because they distribute, well, they don't actually send the distribution out, but it's the ex-dividend date, so the people holding the stock that had it from Thursday and own it as of the close or when the market closes on Friday next week, they'll receive, I think it was 60 some odd cents for owning 100 shares, well, whatever amount of shares they have of Verizon. So either way, has anybody been looking at that at all? It's been really cool for me, and I'm kind of getting excited about trading more of the options on some of these lower volatility stocks because I've watched the portfolio goes up and down because the stock price goes up and down, but over time, it's really accelerating the return that I've been getting because I've relaxed about the up and down of what the stock price does, and I focus more on collecting the premiums, and it all seems to work itself out. Like the stocks kind of bounce around. Maybe one week it looks bad because they drop a bit, but then 2 weeks later, it's back where it was, and it just has been pretty cool. So let me know in the comment section. Anyway, give me a little bit. I'm going to get Jacob. We're going to come talk about his positions. Instead of me sitting over there, I'll try to fit us both in the camera lens so you're not just hearing my voice. Because I know I'm pretty good looking, right? Well, at least I think so. Because anyway, whatever. Making my joke. And like I said, I keep myself entertained even if nobody else does. Anyway, hold on. Let me get him and we'll come back when I have a few moments to get him in the video. All right. So I got handsome and handsomer. So we haven't done any prep. You guys are going to get to see what we talk about, which will be cool. So I'll go right to it. So Jacob, do you have, I asked you to bring your phone so you could look, and forgive if he doesn't look at the camera. Why don't we start with Open Door? Yeah, because something happened in Soundhound that I'm not even sure you're aware of that we'll discuss on the camera. So Open Door closed a little above 8. Last week, you sold an $8 put and a $7.50 put. Nothing got exercised, so you just got to collect that premium. Why don't you take?
Sell any calls?
You don't own any stock.
Oh, okay.
You don't own any of the stock. Now, if you wanted to, you could buy 100 shares and consider selling both, or we could just continue to sell puts, whatever you want to do. But why don't you take a look and let me know what you want to do?
I'll probably do another $8 play.
Okay.
And then I guess since I have to, a $7.50 play.
Well, you don't have to. You could just do the one if you just want to do the one.
Can we like put 2 puts in $8 or no?
You could do, it's your account. You could do whatever you like.
Then?
Okay. And why do you pick that? What's your thought process?
Because I remember last week it was higher, I think. Where was it at? I just need to check where it was.
No problem.
It was at 863 last time, and it dropped all the way to 816.
Okay.
So I'm assuming that it will go back up again.
Okay. So no problem. We can look at doing that. I'll wait until Monday, and then I'll sell a couple of the $8 puts. And then I added a stock. I don't know if you saw that in your account, which is LAC. Yeah. So the reason I did that is the U.S. government took a 5% stake in LAC. They are a company I know very little about. They were going bankrupt, but I find if the U.S. government, which never used to invest in stocks, invests in companies, that those companies tend to do pretty well. Now, I put that on there too and sent you the option screen as well. If you wanted to sell maybe a put and a call, you don't have to. I just liked it because the government got involved. And just pay attention because they only do monthly options. So the one that expires the soonest is 2 weeks out, not this Friday.
Okay. So would I only be able to sell puts or both?
You could sell both if you wanted to. I bought 100 shares.
So then I'll probably do a 750 play.
Okay.
And then
I can tell you in my account I sold a $15 call because I thought it could go crazy. And when I saw you could get about 15 cents, that was really far away. I was like, geez, 15 cents. That's a lot of money for if it goes up another $6.
I know, but also like the puts here kind of suck because there's only the 750 one, which is 35 cents. And then 550, which is 5 cents, and then everything else is 0.
Well, so you don't have to do any of it. Like if you don't think it's a good trade, that's an okay decision.
I still think 750 for 35 cents isn't a bad deal.
It's a pretty good return. Okay.
It's just I wish they had like $8, $8.50.
Yeah, I think it's because it didn't really trade before the stock.
So they don't have it really prepared.
Right, and then the stock went from like $3 to $7 overnight, and now it's becoming more actively traded. But before that, it didn't really trade a whole lot.
Then I'll probably do a 1250 call.
Okay. And you don't have to if you don't want to. That's what I
No,
said.
it's okay.
Okay. So we'll sell the 750 put and a 1250 call. And I know those are both total guessing. And actually, that stock's a bit of guessing for me, too. I don't have huge faith that they're a good company. What I like about it, so you guys know, and I think I've said in other videos, is simply that the government took a stake in it, and I think they're going to make it work whether it should or not. And then the reason I wanted to save Soundhound for last is you want to look at Soundhound and see where it closed.
1784.
Okay, and do you remember what we did last week?
Like a call on $18, or is it, or 1750?
1750, and we also sold a put. So what do you think happened with the 1750 call?
I had to sell my stock.
Yep. Now you had 200 shares, but we sold one call. So now what do you have?
100.
Okay. And even earlier in the video, I talked a little about my recommendation when that happens is to be a little more aggressive with a put, because you just sold 100 shares at 1750.
So make it closer.
Yeah, so I might want to
to.
buy it back at 1650 and make $100 if it falls, plus the premiums and the put and the call, or possibly much more aggressive in the 17. I tend to would go to try to make the $100 because it's $100 instead of 50. But whatever you want to do is fine. And then I talked about it earlier in the video. The other thing I would recommend is just doing that, because stocks that go up can go all the way back down, and you don't get a lot of premium selling a 14 put at this point, unless you like. It's up.
I might try to do a 1750, as well as a $17 one.
Oh, and sell two of them instead of one, and collect 200 shares if it falls.
Yeah.
Okay, it's your account. We can do whatever you like.
And then maybe one call since.
Okay.
Yeah. And then I'm gonna do like a 1850 call.
Okay, so now, again, your account, we can do whatever you like. My recommendation when a stock just starts going up is to let it go and not sell another call.
So
because
I'll probably don't.
Okay, now you can. I don't want to tell you not to, and I don't mean to talk you out of it, but just so you understand my thought process and what I do with trading is if a stock really starts going to go higher, I don't want to get into a position where it just goes to $25 or $30 and I don't own any, and I'm constantly kicking myself because, gee, I had one I was lucky with that really just ran. So still, your decision, but what would you like to do?
So then maybe just the puts in.
And you want to sell two of them,
them.
a 1750 and a 17?
Yeah.
Okay. And what was your thought process with those?
Well, like you said, since the stock always goes down, if it goes like very high, not always, but it will have a time when it goes back down. I assume that I can make some money off of it while getting my stocks back.
Okay.
Because the 1751 is 72 cents.
Yeah,
and
that's
if it
good
does
pay.
go up,
At
then,
least you collect an extra 72 cents.
yeah,
Okay. And then you wanted to sell a 17 put to get longer.
yeah, to
Okay.
get more like cash into it.
Okay. I'll sell both of those. Sounds good. If anybody has any comments, make them all in the comment section. That's our plan for this week. As always, if you haven't already, do me a favor and hit that subscribe button, smash the like button. Have a great weekend. I'll work on editing this later today.
Bye-bye.